Hey guys, John Polemy here, Actionable Intelligence. Today is Saturday, March 2nd, and this is the weekly market update. The disclaimer, anything that you hear or see on this podcast or video is not to be taken as investment advice. I am not a registered financial advisor, and I cannot give you personal financial advice. Please do your own due diligence. It's your money. It's your responsibility. I mean, obviously, you can hear I'm still getting over this cold. So apologize for the voice and the if there's any coughing or anything like that. So let's get into it. Okay, just point this out from Charlie Billio. The interest payments on U.S. national debt are on pace to surpass defense spending in 2024 as the third largest federal government expenditure. Only Social Security and Medicare are forecasted to be higher over the next decade. And this is precisely why I own physical gold as some portion of my wealth. To protect myself against what, as Ray Dalio says, government malfeasance, central bank malfeasance. This is not sustainable. Does that mean it's actionable today? No. These things play out over decades, as you can see, but over the next 10 years, Social Security, Medicare, and interest on the debt are going to go close to parabolic. Not sustainable. But as I say in the title of the slide, this isn't a problem until it's a problem. But it needs to be on your radar screen because at some point it's going to be a problem. You know, I've seen some people, I saw some discourse on Social Security on X, and I was going to jump into it, but it's like pointless because people are convinced themselves of things. You know, there was a person on there, one guy was talking about this, the fact that we don't have the money for this stuff. And the guy was like, you need to prepare yourself for what's going to happen, especially if you're completely reliant on Social Security. It's going to be a problem. And people came back, no, it's not going to be a problem, but because they had that's all they have, right? They're clinging to it. And you're talking about it's not the flotation device I thought it was. No, it's not. Uh, they can't pay all the benefits for all of the people. This is a math problem. It's not a philosophical problem around socialism or right wing, left wing, or people being Christian or non-Christian or not wanting to help or help. It's a math problem. The promises that were made across all of the West, post-war World War II West, are not sustainable. And that's what you're seeing. You're seeing the collapse of that now. And so this is just another indication of that. So prepare. You've been warned. Commercial real estate foreclosures, highest since 2014, but yet we're in this tremendous economy. I expect this to continue. You see the stories pop up here and there about people just selling these buildings for. I saw two this week. I saw one, this huge building in Allentown, Pennsylvania, was sold for some absurd, cheap amount of money. And then there was a pension fund in New York, or a property in New York that a pension fund owned, that they sold the property for $1. So we'll see what happens. But I think that the debt that's propping up a lot of the commercial real estate still has an opportunity to be a problem. Okay, we are in a credit cycle. We are in a in my view, and so this is going to be a contributing factor. So I just wanted to point this out. Chart from Kevin Smith over at Crescat Capital shows the price of Microsoft, price of Apple last couple of years, and it's showing the free cash flow from both companies. And so just another example of overvaluation. These things, I give my view based on my experience going through multiple bubbles, which I've been through several now. And so it's very easy to recognize a bubble. I don't necessarily have to get into the weeds of each one of these companies. We're in a bubble. Okay. The sentiment is the same as it was during the great financial crisis, during the Y2K internet bubble of 99, 2000. If you go back and read, Nifty 50s, the whole thing, it's just repeatable. Okay. And so people can buy these stocks and pay like this, and yet the prospects of the companies are not only not improving as far as free cash flow, which is something I'm interested in, it's actually declining in some cases. So you can, everybody's free to do what they want. I just point these things out. Um, I've seen this before. The sentiment is what it is. That doesn't mean it can't go higher. It very well could. It could, anything can happen. That's what I've come to believe. Whether it's likely to happen is the other question. And so rest of the world's a lot cheaper than the US. Here's the price to book US versus rest of the world. Just one metric. People can call it cherry picking, again, from Tavi Costa, Crescat. Been making this argument for a while. So you have the price to book of the S&P 500. You could see back in the tech bubble in 99, 2000, it was above 5 times. And you could see it currently, 2021. Now we had that pullback in 2022, and then we're, going back up into this rally where everybody has a reason why this is going to continue forever. I like what Louis Gove said. I listened to an interview with him. He said, is talking specifically to this fact that the rest of the world's cheaper than the US, particularly emerging markets. I guess you can believe that AI is going to be what everybody says it's going to be and more. So that's going to drive the US into new, higher levels of prosperity, which is going to drag stock prices along with it or justify these high stock prices and push them higher. That's one view. Or you can have the view that the 3.6 billion people ex-China between Istanbul and Jakarta are now entering their S curves and their consumer S curve as these emerging middle classes come to fruition in the global East and South, and consumer demand is going to move higher in these places over the next decade or so or more. And that's going to create better prospects than, than what's available to you in the US. I agree that you probably have better prospects in the emerging markets. And so that's where I'm focusing my attention in my investment dollars. Somebody asked me, what do you think the next uranium is? I haven't found a uranium type situation, okay, that I can roll into, but I'm like, or something as lucrative as oil field services, which is still playing out, particularly offshore. Both of those are still playing out, and they're in their fruit-bearing phases of the cycle that they're in for me as an investor. So have I found something that's as lucrative as both of those? No, but I think emerging markets is has potential as far as when I look at something being extremely undervalued. It's something that I have been moving into. And so far, so good. Will emerging markets 10 bag? I don't know. Will particular companies in different markets have the potential to 10 bag? Probably. Am I going to try to identify them? Yes. But, it's, I, again, we're going back to, do I want to buy things that are not only fully valued, but probably overvalued with the expectation that the current bubblicious narrative continues? I just can't do that. So, I don't think that the average person can really articulate why things aren't good in the United States for the average person or for the working class people. But I think something like this is something they do understand. It's the United States children earning more than their parents as a percent, and you see it's been in decline since, post World War II. And that's going to continue, right? As the rest of the world, you're not competing with the rest of the world on an even foot more and more. Okay. And I'm just amazed at some of these. I don't know. I don't know how to even uh, explain it, but people will just be like, China has 1.2 billion people. Yes, their demographics aren't good over the next 30 or 40 years, but does that matter for the next 10 years to me? No. Like same thing in India. They're like, 1.4 billion people in India. Both these places produce tremendous amounts of scientific and engineer STEM type people, way far in number than we do. And yet the United States, they think, is going to stay as this, on top, on everything. It's just not possible. It's not going to happen. So I think economic growth, economic ascendancy shifting to these other places. And the U.S. basically needs to go through a restructuring, and it's trying to put that off. But you see it, right? You see the wealth in some areas. You see the poverty in other areas. Somebody said to me, they showed for example, somebody went to Moscow and they were showing, they said, well, go outside the Moscow ring road and you'll see something. You'll see people without indoor toilets, and you'll see poverty. That's true. You will see that. You will see that. I think 30% of the people in Russia in the rural areas have outside rural toilets. You know where else they have them? They have them in these colonias here in South Texas. They have, you can drive all over the United States. There's people that do that. There's rural, former Rust Belt small towns people drive through, and you can see the poverty. I just came back from a trip through the Mississippi Delta. It didn't look like super wealthy to me. Okay, so you can find this everywhere, right? You can't just say, I guess the idea is, when people look at this and say like, well, I don't see it. Yeah, well, it's not about you as an individual. That's another problem people make. Well, I don't know what you're talking about because I don't see it because it's not my life. As if you or me are the, median or average of the United States. It's just not a smart way to look at things. And, there are pockets of wealth. If you have money in the United States, you could live very well. If you don't, a lot of people are struggling. And this is going to continue to, I think, be the case. And this is what causes angst with people. Not just this, but this is just, I think, a higher level, what gives people the view that they have. It's like something's not right. This isn't working for me and for my family, this system. I guess that's the point I'm trying to make here. And so I think this is going to become worse, and it's going to manifest itself in all types of probably negative social and political trends, but we'll just have to see how that goes. But I think it's interesting to note this. I was born in this area, and things were kind of leveled off, for the decline for a couple decades. Actually, I didn't come into the workforce until in here, but things were, slowly but surely slipping away. And how do you turn that around? Send more kids to university, put them in debt? I don't know. So, U.S. global investors chart, just wanted to point this out. Something seems to happen to be happening in the oil market. Are we in a new uptrend? I don't know. I'm not ready to call that. I had a recent call where I was on a panel. I'm going to say a panel. It was just me and Josh Young being interviewed by Jesse Day. Talked about oil. I found it interesting, and I'll get into it here in a minute, with the recent comments that were made in the Goehring and Rozenswajg recent narrative or commentary they put out, specifically around US shale and Saudi production. So just talking about US shale, I just pulled this snippet out. I really encourage you to read the whole paper talking about US shale and Saudi oil production. I just pulled this snippet regarding US shale. As we studied the data more closely, we have strong reason to believe it is simply incorrect. Instead of they were talking about shale growth, not the total amount of liquids, but the growth percentage. Instead of accelerating growth, our analysis suggests U.S. liquids growth is overstated by nearly 30%, while U.S. crude growth is overstated by 40%. Most importantly, our analysis tells us growth slowed dramatically throughout 2023 and is at risk of turning negative on both a year-on-year and sequential basis as early as March or April. If we are correct, the implications will be tremendous. Instead of surging, the only material source of non-OPEC production growth is grinding to a halt. Is this what Price is telling us? Again, I suggest, during your weekend reading or leisure time, you read that. It's just one section of the overall report, but I think it's pretty good. Goes into, what they've talked about before in previous commentaries, but I think it's finally, to their point, they think that's coming to fruition now. I don't know one way or another, but I think it's worth following. I have respect for these guys. I listen to them. That doesn't mean they're right necessarily, but it's worth reading it and considering the possibilities and what the repercussions be if U.S. shale growth is coming to a halt. Now, again, Josh kind of talked about this in that interview that we had. At $80 a barrel, there's only going to be a certain amount of rigs turning and, willing to go out and find new oil or produce more oil, should I say it that way. If the price is 120 or 150, that dynamic changes. Previously, more resources become viable that before weren't viable. So a lot of this is based on price too. If price goes up and is able to hold up for some period of time, that drives investment, and you will get the marginal barrel you'll get that marginal barrel out of the ground. So anyway, I think that's something to pay attention to. But demand is now at all-time highs again. We've recovered from the post-pandemic recoveries, and we're back on trend of 1 to 1.5% a year growth in oil demand. So I expect that to continue. And so that's going to be relentless, right? Unless you have like a GFC or a pandemic or something like that. That should be pretty relentless going forward. And one of the things also I think that to keep in mind is IEA and EIA, these people, I think they constantly underestimate demand. There's, IEA still in this camp, I think, about peak demand or these ridiculous notions that they, that I think are skewing people to think that, they're skewing thinking towards, well, these are not, hydrocarbons are not investable. Oil and gas exploration is not investable because peak demand's coming. So why would I put money into this, especially around the banks and stuff like that? So I think that could actually exacerbate the supply response of not being able to have the supply response that you need. So that's U.S. shale. Let's see what they have to say about Saudi. So they go through this big several paragraphs. Like I said, you have to read the whole thing where they talk about Matt Simmons and the work he did. But then he may have been a little bit early, but now it looks like, the question is Saudi oil production in the plateau phase? So here's the snippet. They go talking about the reserves that Saudi has or has demonstrated, and also these smaller fields that they seem to have that they think might have potential. It says if the 45 billion barrel contained in fields too small or remote to evaluate were not recoverable, which we believe, then production would peak in only 6 years. Under this scenario, Saudi production should be in the plateau phase, and incremental production gains would be likely short-lived. Since 2015, Aramco has, in fact, unexpectedly throttled back production several times. While the stated reason has been to balance the market, it may have more to do with geological depletion than is commonly believed. I think this argument has some validity. They've been taking what they didn't like to do in the past, was just keep lowering production and then have shale or other producers give that market share away to other producers. Now they don't seem to be so concerned about that. They don't seem to have that same discussion, doesn't seem to be present, right? So I think this statement about throttling back production several times, and the reason has been to balance the market, it may just be, they were, obviously want to balance the market, but they also has something to do with depletion. I think there was a recent article where they were going to ramp up investment to bring production up like 1 million barrels a day, and I think they canceled that. So why are they Why are they doing that? So it's difficult to know because Aramco's never going to come out and say, yeah, our production's peaked and we anticipate declines. I mean, they're just not going to do that. And so eventually the truth outs. But again, if this is in fact happening at the same time that US shale may be peaking, this could be very bullish, secularly bullish for oil prices going forward. So I wanted to talk about this article that came out this week. It says, clamor for German nuclear revivalist policy crumbles. It says, polls indicate that the center-right Christian Democrats, which now supports a revival of the country's nuclear assets after signing a declaration in January, could garner around 30% of the votes in next year's election, meaning the current opposition would likely spearhead any coalition. They talk about bringing back the nuclear power plants, and there's a bunch of discussion in the article about why it can never happen. It's not going to happen. But the fact that they're even talking about it tells me, again, that the thinking might be changing. I've been on record as saying I predict that eventually they will turn on reactors and go back to nuclear power. I don't see why they wouldn't. It has nothing to do with safety or the ability of the Germans to run nuclear power plants. It's just simply a political decision that was made, and political decisions get reversed all the time. Political expediency drives things. They don't, in the article, they just talk about the CDU. They don't talk about Alternative for Germany, which is polling very close to 30%, and which the CDU said they will never be in a coalition with, but we'll see. It always depends what's politically expedient. Would you rather be out of power or would you rather be in power? I mean, that's what ends up happening. So never say never. And I still think that eventually economics and physics always wins out, and people always end up voting with their pocketbooks. And so, this whole green agenda there, Olaf Scholz, Robert Abeck, Annalena Baerbock, they're a total disaster. Maybe the German people will continue on with that. They like that. I don't know. We'll see. I don't think so. I don't think that's the case, but we'll see what happens. I like this final quote here. One of the politicians said regarding the nuclear revival, we need to seriously re-examine what is possible. So saw this on X, these quotes from Mike Alkin. They were regarding the spot market. This kind of makes sense. And I know this has been alluded to before, but I just wanted to put this on here to remind people that even other folks have said the same thing, that expect the spot market to be volatile. And so why is it volatile? Why is it jumping around? And why you shouldn't focus on it. So this is from Mike Alkin. Quote, I buy physical uranium in the spot market, obviously for his fund that he runs. It's a uranium-based fund. So I'm in the spot market. The spot market is made up of about 7 or 8 physical traders who do not have balance sheets that last past a month or so. It's a game of hot potato. That's all it is. And he goes on to say, it's mostly traders churning pounds back and forth to each other. I took in 200,000 pounds. Let me see if I could flip it to somebody else for $1 or $2 a pound. That's how they make their living, which is great, but it's not indicative of massive amounts of demand that are needed. So I think if you keep that in mind, what the spot market really is, it's really fun when it's going up. It's not so fun when it's going down. But why is this thing fluctuating all over the place? People have asked the question. I've seen them on uranium Twitter. Well, I don't understand. It was at 106 and now it's at 95 and it's up and down. And I thought we had a supply demand imbalance. That's a complete lack of understanding of how this market works. So here in 2 slides and 2 comments, Mike Alkin, who probably knows more about this than most people, I would suggest, basically explains it to you. A lot of this is noise. Until the supply-demand fundamentals are going to be fixed, until I see a bunch of supply coming on, I remain bullish on uranium. I don't see the supply. I see a couple of brownfield projects starting up in US and Australia, one in Namibia here, probably late this month or early next month. That's it, and that's not going to get it. Where are the big projects that are like, when's next gen's project going to come online? Okay. This is what you need to see, guys. It's not happening. Okay. Yet demand continues to increase. Announcements for more builds continue to happen. Oh, by the way, here we go. Need to redo the demand calculations now. India to add 18 more nuclear power reactors with total capacity of 13,800 megawatts by 2032. So this is the kind of stuff that's going to continue to happen that people didn't have on the bingo card. Oh, India decided to build another 18 more reactors by 2032. Well, when's 2032? That's 8 years from now. In nuclear power, 8 to 10 years is nothing. So if you figure these are what, I don't know how big these, 13,800 megawatts. I don't know how many plants that is. Well, 8 says 18. So, you're talking about what, another 6 million pounds a year of demand, something like that. That's coming, and then you need 3 times that when you're first starting up the reactors. Now, these aren't all going to come online in 1 year. It'll be spaced out, but again, constant upside pressure on demand because we're now in a growth industry. Nuclear power is the future. Remember, the evolution of energy in human civilization is very simple. This is not hard to visualize what's happening here. Yes, we're in a current fever state around less dense, less EROI energy sources, i.e. renewables. The history of human civilization and energy is that we go from less dense sources of power to more dense. And so nuclear was the inevitable evolution, and it's now manifesting itself in humanity. To go where we need to go, we need nuclear power. We are going to have nuclear power. It's going to be on a scale that you can't imagine. You're not going to run the world off solar panels and wind power. It's just that simple. I'm sorry if you believe that. It's not going to happen. And so if you don't get this, if you're worried about fluctuations in the spot price, I mean, you're going to have a hard time making money here. It's just sit back and enjoy the ride. You should know what companies you like at this point. You should, what you originally paid for them. You should understand what their projects are, what their prospects are, what they're trying to do. If they continue to move towards that success of becoming a producer or whatever, then you stick with it. And if price drops 20, 30, 40%, then I don't know. If you, like I said last week, if you love something at 4, or if you like something at 4, how come you don't love it at 3 or 2? So you're going to see more news like this. It's not predictable. All of a sudden people will be like, yeah, we're going to do this. This is an addition to what they were doing before. So this is how you have to look at things. And so nuclear power right now is the most dense form of energy production that we have. Yes, it doesn't fix all of the issues and problems because what do you do about liquid fuel production? But having a tremendous amount of nuclear power available opens up a lot of other things for being able to do a lot of other things, reactions and transformations of chemical transformations that I think could alleviate things. For example, Dow down here at Freeport, they're going to put those, currently at the chemical factory, what do you have? You have a cogeneration plant that burns natural gas in a turbine. The heat it makes electricity that's exported to the grid with the generator. The heat from the gas turbine goes into a heat recovery steam generator, and it's basically a boiler, and it creates steam. The steam is used in the chemical processes in the chemical plant. Well, what if you replace the cogen that's burning natural gas, okay, with a SMR to produce the steam and electricity? See, that's the future. And now you can use that natural gas for other things, for higher value things, instead of just burning it for thermal to create steam for your process. And so that's the trend, guys. That's what makes things more efficient. Higher uses, and then the inputs of the natural gas can go into something else. Maybe it could be used as a transportation fuel or a feedstock for some other chemical process. That's what I'm talking about. That's what nuclear power allows. Not only the fact that if you really want to get into this hydrogen and things like that, the best way to do it if you're going to do it, create it, by cracking water, hydrogen out of water is probably nuclear power. Trying to do it with solar panels makes no sense. Okay, that's it for this week. Like I said, I've been sick, so this is a short one. Uh, Probably was all over the place. It wasn't that organized. Apologize for that, but wanted to get something on the board this week. Should be in better condition next week, and we'll be looking forward to talking to you then. Thank you.